Hello champions, how are you all? So today we are going to start with our Manthan question bank, okay, for the May 26, September 26 and the January 27 attempt. So starting with the first chapter, that is the basic concept chapter, okay? Now, in the basic concept we have already studied the concepts. Now we are going to study with the questions, okay? Now, start with the question number 1 without wasting any time. Mr. Arjun has a total income of 16 lakhs for the previous year 25-26, comprising of his total income of house property, interest from deposits. Now you have to compute what? You have to compute his tax liability for the assessment year 26-27. Assuming his age is 52, 64, 83 years. Now Mr. Arjun has exercised the option to shift out of the default tax regime. The default tax regime is under the 105 BAC. Okay, if he is going to shift out, that means he is going in the old regime. He is going into the old regime. Okay, now can you please solve this particular question with me? Yes, we can solve this question. So till now we have write down the notes. Now starting with the question bank, the questions. Okay, now question number 1. First of all, what you need to write? You need to write what is the requirement of the question. That is the computation of tax liability. It is the requirement of the question. Yes. Computation of tax liability. Now you have to write for which assessee you are going to compute this particular tax liability. This is for Mr. Arjun. Okay. The age is of 52 years. Okay. For the AY 26-27. This is what you need to write. Okay. And afterward, see this what you have given just right now, this particular heading is important to give. It is not like that it will if you not write, it will deduct your marks. It will not deduct your marks, but it is very much important that you write, and it is for the good presentation that what you are calculating. So to identify what you are calculating, this is the best method that you should follow. Okay, now solve this particular answer. You already know what is the tax lapse for the old tax regime. Okay, he has already shifted out from the default tax regime. Okay, now first part is what? It is a first part where it is of 52 years of age. Okay, now compute it with me. For first 2,50,000 rupees, because he is of the age of, he's of the age of 52, means he have to follow the 2,50,000 rupees of the basic exemption limit. Yes, so it is going to be the nil. For next, 2.5 lakh, means 2,50,000 to 5 lakh, it is going to be at the rate of 5%. Okay, then next 5 lakh, means 5 lakh to 10 lakh, it is going to be 20%. And above 10 lakh, okay, above 10 lakh, that is, if I have to say, only 6 lakh rupees, because above 10 lakh is what? Above 10 lakh is only 16 lakh, no? That is the total income is what? 16 lakh. So above 10 lakh is only 6 lakh rupees. Okay, so that is what the only 6 lakh rupees will be taken at the rate of 30%. Can you please calculate it? It is going to be 12,500, it is going to be 1 lakh rupees, and it is going to be 1 lakh 80,000 rupees. So it comes around 292 500, 292 500. Add will be, there will be no surcharge because the income is below 50 lakh rupees. There is no concept of rebate here because the income exceed 16 lakh, but it is a no, or if the old regime, so the income exceed 5 lakh rupees, so there is no concept of the rebate. Yes, so add directly health and education cess at the rate of 4%. What it will be? It will be 11,700. So the final answer is going to be what? The final answer is going to be 3,04,200. Understood? 3,04,200. This is for the first part, that is of the 52 years of age. Now calculate this same thing. Now calculate the same thing for next thing, that is 63 years of age. Okay, now calculate the same for the 63 years of age. You have to calculate it. Okay, calculate it. The next is 64 years of age. Okay, yes. 64. In the 64, it is going to be 3 lakh. This will reduce, this will reduce. Okay, and the balance will be remaining the same. This will done this and this. Okay, now it's 64 years of age, so up to the first 3 lakh rupees, no tax. On the next 2 lakh rupees, that is from 3 lakh to 5 lakh, that is going to be what? 10,000. 10,000 plus this is going to be 2 lakh 90,000. Correct? 2 lakh 90,000. Now, plus 4% HEC is going to be 11,600. Now it is going to be 3 lakh 1,600. 3 lakh 1,600. Understood? The same way, can you please solve it for the same way? Can you please solve it for the next part, that is point number C? Next part, that is point number C. It is point number P. For point number C, it what they asked was 83 years of age. Okay. Point C, they asked for 83 years of age. Okay, now for that what you need to do, you just need to follow that this is going to be removed, this is going to be removed. Okay, we are going to just write it separately. Okay, and this is going to be, just a second, yes. So on the first 5 lakh rupees, on the first 5 lakh rupees, if he is a super senior citizen, it is going to be the nil. For the next 5 lakh rupees, that is from 5 lakh to 10 lakh, it is going to be 20%, which is going to be 1 lakh. Okay, for the next 6 lakh rupees, it is going to be at the rate of 30%, which is going to be 1 lakh 80,000. Okay, it is going to be 2 lakh 80,000. Correct. Now add the HEC as well. Add HEC at the rate of 4%, which is going to be 11,200. Now it is going to be 291,200. 291,200 is going to be the final answer. Understood? So the first question is clear to you. So the first question will be, the answer of first question will be 304,200, 304,200, 301,600, 301,600, and then 291,200, 291,200. Every answer is corrected. Yes, tell me or not. Checked. Shall I move forward? Yes. Coming to the question number two, which is an interesting question. Okay. It is based on the concept of marginal relief. Now, what this says, now you have to compute the tax liability of Mr. Arpit, which is of who is of age of 42 years, correct? Having the total income of 51 lakh rupees for the assessment year 26-27. Now, assuming that the total income comprises of the salary income, income from house property, interest on fixed deposit, assume that Mr. Arpit has exercised the option to shift out of 115 BSE. If he is shifting out of the 115 BSE, that means you have to calculate as per the normal regime. Correct or not? Tell me that. You have to calculate as per the normal regime. Now, the income is of 51 lakh rupees, then the concept is of marginal relief will apply. Yes. Now, coming to the question number 2, and start solving with me. First of all, we'll write the same thing. Computation of tax liability. We have to compute the tax liability of whom? Of Mr. Arjun. Okay, for the assessment year 26-27, that you need to write always. Okay. Hmm. Yes. Just a second. Let me check in frame. Yes, now it's particular and rupees. The first step in calculating the marginal relief was the tax on 51 lakh rupees, the original income. What was the original income of that particular person, Mr. Arjun? It was 51 lakh rupees. So the my first step is going to be tax, calculating the tax on 51 lakh rupees, but excluding the HEC, health and education sales, but including the surcharge. Can you please calculate the tax on 51 lakh rupees? Can you please calculate the tax on 51 lakh rupees? It is going to be 14 lakh 76,750. Correct? Including the surcharge, if any, that is of 10% because the income is exceeding 50 lakh rupees. Correct? Now, the second step in the process of calculating the marginal relief is that calculating the tax on 50 lakh. Calculating the tax on 50 lakh. Now, what is the tax on 50 lakh rupees? Here, the surcharge will not be applicable, but and HEC we are not taking into consideration. So, can you please tell me the tax on 50 lakh rupees, and also say it is of age of 42. So, only 2.5 lakh rupees of the deduction shall be given to you, given to Mr. Arjun only. Okay. So, it is going to be 13 lakh 12,500. Correct? Now, what we have to see? We have to see what is the increase in income and what is the increase in tax. As what we have seen in the concept of marginal relief, that the increase in income is 1 lakh rupees, but increase in tax is what? Increase in tax is what? See, earlier we were used to give the tax of 13 lakh 12,500, but now we are going to give the tax of 14 lakh 76,750 due to the surcharge. Due to the surcharge become applicable, because on the 50 lakh rupees there was no surcharge, but on 51 lakh rupees there is a surcharge. So my income, so my tax increases from to 13 lakh 12,500 to 14 lakh 76,750, which is an increase of 1 lakh 64,250. 1 lakh 64,250. So what was the third step that we need to do? The third step was to step 2 plus increase in income. What is the whatever the income is, just increase it by that. Okay, so it is going to be 13 lakh 12,500 plus 1 lakh. Okay, so 13 lakh 12,500 plus 1 lakh, then it is going to be 14 lakh 12,500. Understood clearly? So this is my tax liability as of now. Now, fourth step is what? Calculating the marginal relief. Calculating the marginal relief. Now, how do we calculate the marginal relief? We said that earlier what you were paying. Earlier you were paying step number 2. Okay. Earlier you were paying what? Step number 2. Sorry. Sorry. That was done. Na? What is the marginal relief? What we are asking you? We are asking for 14 lakh 76,750. But we have given, we are just now taking what? 14 lakh 12,500. Earlier we were asking you 14 lakh 76,750. Now under the step 3 we are saying that okay, if this is the case, we are just asking you 14 lakh 12,500. Means earlier they were asking this, now they were asking this much only. So the difference is going to be the marginal relief, which is going to be 14 lakh 76,750 minus 14 lakh 12,500, which is going to be my 64,250, which will be as equal to the difference of the two, as already discussed in the concept. This is going to be the difference of these two parts only. Okay, now this is the calculation of the marginal relief till now, but whether we can stop here? No, we have to calculate the tax liability. What we are here for? We are here for to calculate the tax liability. Till now the tax liability is not came. Okay, now the tax on, now what we are saying? We are saying the tax on 51 lakh rupees. What now the government is charging from us? The government is charging from us that 14 lakh 12,500. Yes, but how it came? How it came? Because earlier the government asking me 14 lakh 76,750. Earlier the government was asking me 14 lakh 76,750. Out of it, they gave us the marginal relief. They gave us what? The marginal relief. The marginal relief was the 64 250. So the balance will be what? 14 lakh 12,500. Okay, so 14 lakh 12,500 in the outer column. Above that, there will be a health and education cess that will be added at the rate of 4%, which will be what? 56,500. Now the total tax liability. The tax liability is gonna what? 14 lakh 69,000. 14 lakh 69,000. This is going to be my the final tax liability. The government is asking me this much, but they have given me the relief of that. So the my final tax liability is 14 lakh 12,500. Over and above that, I have to pay what? Health and education cess. So the 14 lakh 69,000 is going to be my final tax liability. Can you please see that? It is going to be the 14 lakh 69,000 and 64,620 is going to be your marginal relief. The two methods were given. We have followed the alternative method because it was the easy one. It was the easy one. Understood or not? Tell me that. This point is also clear. Coming to the question number 3. Yes. Now, the question number 3 is also the same question. I do not want to talk about this particular question, but due to only one point, I am talking about this question, which is that you have to compute the tax liability of Mr. V, which is of 51 years of age, under the default tax regime. You have to now calculate as per the default tax regime. The total income is going to be 1 crore 1 lakh rupees. The same question has already been solved in the classes as well in the with the concept that I have given you the example of 1 crore 1 lakh rupees. But now in the question part, why I am solving this? Because in the class it was solved as per the normal tax regime, that is the old tax regime. But now they are asking for the default tax regime, and we have only one question as long of this particular type of question of the default tax regime. Otherwise, usually the questions are of the old tax regime itself. So there is only one question. That is why I am interested to solve this particular question with you. Okay, now everything remains the same for the assessment year 26-27. His income is his total income comprises of the salary income, house property, and the fixed deposits. Okay, now we have to compute the total income, and the total income is what? Of the 1 crore 1 lakh rupees. Okay, question number 3. Computation of total income. Computation of total in sorry tax liability, not the total income. Computation of total tax liability of Mr. Veer for assessment year 26-27 under the default tax regime, where you have to calculate as per the default tax regime, and the income is 1 crore 1 lakh rupees. That means the concept of marginal relief is applicable here as well. Yes, so we are going to solve this particular question. Okay, particulars rupees. Okay, now step number 1, calculate the tax on the original income, which is 1 crore 1 lakh rupees. What is the tax on 1 crore 1 lakh rupees? Please solve as per the default tax regime. As per the default tax regime, if you see, we have, as per the default tax regime, if you see, we have this particular, as per the default tax regime, we have this particular tax rates. Okay, on this particular tax rate, from 4 lakh rupees till the 24 lakh rupees, till here, the total tax is 3 lakh rupees. The total tax is 3 lakh rupees. So over and above whatever from the 24 lakh rupees, just multiplied by 30%, add 3 lakh on it, so you'll get the total tax on the 1 crore 1 lakh rupees. So what you do, see on the calculator, 1 crore 1 lakh rupees, you have to type, okay, reduce 24 lakh rupees from it. Okay, so it is going to be your total income, it is going to be your balance income. On that balance income, just multiply 30%. Okay, you will get the answer. Just plus add 3 lakh rupees from on it, which is the tax on 24 lakh rupees. You get the final tax liability. But here the income is what? See, the income is what? 1 crore 1 lakh rupees, means there is a surcharge of 15% on it. Yes, just add, just plus it 15%. Okay, you will get the answer. You will get the answer of the tax liability, which is going to be 30 lakh 1500. Are you getting it? Correct. Now the second step, tax on 1 crore. What is the tax on 1 crore? Do the same thing. See, 1 crore minus 24 lakh multiply by 30% plus 3 lakh rupees plus 10%. What is this 10%? 10% is the surcharge rate over and above the 50 lakh rupees, but up to 1 crore rupees. Do you get the answer? 28 lakh 38,000. Yes, write it. 28 lakh 38,000. Understood? This is going to be your income tax. Okay. Now, what we have to calculate? Increase in income, increase in tax. Increase in income, increase in tax. What is the increase in income? 1 lakh rupees. But what is the increase in tax? Earlier we were paying this, now we are going to pay this much. So the difference will be of 1 lakh 63,500. The difference will be of 1 lakh 63,500. Understood? Now, what is the third step? We have to say that step 2 plus increase in income means step 2 is what? Step 2 was 28 38 plus 1 lakh rupees. It is going to be 29 lakh 38,000. Correct. Now what is the marginal relief? Can you calculate the marginal relief? Yes. What is the marginal relief? Step 1 minus step 3. Step 1 minus step 3. Earlier we were asking you 30 lakh 1500. Yes, 30 lakh 1500. Now what we are asking you? 29 lakh 38,000. So what is the difference? 63,500, which is going to be the same of the difference between the two. Always, yes. Now the final tax liability is going to be what? We are saying that tax on rupees 1 crore 1 lakh rupees is going to be what? 30 lakh 1500. Correct. Reduced by the marginal relief. What is the marginal relief? Tell me. 63,500. Yes, 63,500. So the difference is going to be what? The difference is going to be the 29 lakh 38,000, which we were asking in the step number 3 itself. Correct? Yes. So 29 lakh 38,000 add health and education cess at the rate of 4%, which is going to be what? Which is going to be 1,17,520. 1,17,520. And my final tax liability is now going to be what? My final tax liability is going to be 30 lakh 55,520. 30 lakh 55,520. See in the question, 30 lakh 55,520 and 63,500 is going to be my 63,500 is going to be my marginal relief. Do you got this particular answer as well? Tell me this. Do you got this answer? Very easy question. Question number 3 done. Question number 2 done. And then question number 1 all parts done. Correct? Shall I move forward to question number 4? Yes. See, question number 4 is going to be extremely easy. Is going to be extremely easy. Now it is going to be your homework. Why it is your homework? Because they are asking the same thing on 2 crore rupees of income. They are asking the same thing on 2 crore rupees of income. Then it is going to be very easy for you. Everything to be done same that we have already done for 50 lakh rupees, that we have already done for 1 crore rupees. They are asking for 2 crore rupees. Then question number 5 is going to be interesting. Question number 5 is going to be interesting. It is based on one concept that I have already taught you in the question note. Okay, remember one thing, that see what they are asking. They are asking for a tax liability of the age of 65 years of age. Okay, in a most beneficial manner. What are they asking? See, If his total income is 5 crore 1 lakh rupees for the assessment year 26-27, assume that his income comprises of the salary income, house property income, and income from the fixed deposit, and is same under the both regimes. What they are asking that the income is same under the both the regimes. You have to find the most beneficial manner, whether you have to calculate as per the means you have to calculate as per the default tax regime, then you have to calculate as per the normal tax regime, that was the old tax regime, and compare which one is more beneficial. So I have to compute by both the methods, default tax regime and the new tax old tax regime, and the income is what 5 crore 1 lakh rupees, and the income is what 5 crore 1 lakh rupees. That means what I have to do, listen to me very carefully, okay, listen to me very carefully, and if I am saying something wrong then please correct me. What I have to do, I have to first compute the tax on the default tax regime, then I have to compute the tax as per the old tax regime. See, whatever is most beneficial to the assessee, I am going to opt out that I am going to opt for that particular regime, correct? First thing. Second thing, tell me that if on what should be my manner of computation. I'll compute if it is a income of 5 crore 1 lakh rupees. Then under the default tax regime, calculate the marginal relief. Under the old tax regime, calculate the marginal relief as we have done already in this particular questions. Okay, and whichever is most beneficial is going to be the answer, whether I am saying correct or not. Tell me that whether I am saying correct or not, that you have to calculate as per the default tax regime, calculate as per the margin relief. Okay, that we have done under the question number 2, and in the new tax regime, sorry, question number 3 under the new tax regime. Okay, correct. Then as per the question number 2 we have done as per the normal tax regime. So compare the same question in these both the tax regime, and whichever is most beneficial to the assessee is going to be my answer. Whether I am saying correct or not, I am saying wrong. Why I am saying wrong? Because see, what is my income? My income is 5 crore 1 lakh rupees. And remember a bit my question note, if you remember a bit of my question note, then there is a question note under the concept of marginal relief, that on income above 4 lakh rupees in the concept of new tax regime, there is no concept of marginal relief. And I have also explained you why, because the maximum surcharge is already reduced to 25% only. There is no surcharge of 37% under the new tax regime. So there is no concept of marginal relief in the new tax regime if your income exceeds 5 crore rupees. If your income exceeds 5 crore rupees, and see here my income is exceeding 5 crore rupees, so there is no concept of marginal relief under the default tax regime. But under the old tax regime it is applicable. Yes, it is applicable. So see, whenever they have computed as per the default tax regime na, they have just computed the normal tax liability, not as per the marginal relief. But when they opt for the optional tax regime, that was the old tax regime, see they have computed as per the marginal relief. They have computed as per the marginal relief, and as per the default tax regime, the tax comes 1 crore 89 lakh rupees. Okay, and as per the normal tax regime, it comes to 1 lakh 93 lakh rupees. So what is beneficial to the assessee? For the assessee, the default tax regime is beneficial because the tax liability is lower in that. Okay, so that is why they said that it is beneficial for Mr. Akhil to pay as per the default tax regime, because the tax liability is lower by 3,64,000. This minus this. Understood? This is just, everything is going to be the same that you have already done, but the difference is what? The only difference is going to be that under the default tax regime on 5 crore 1 lakh rupees, there is no concept of marginal relief. You have to compute the normal tax liability on that income. Understood? But the surcharge is going to be restricted on 25% only, not 37%. That is already taught to you. Correct? Now, computation of total income, this is going to be the same. So, on the question number 4, there is nothing. Question number 5, I have already discussed with you. Understood? This is discussed with you. Question number 4 is going to be a homework, which is absolutely same. Now coming to the question number 6. From now, the theory part, most of the things is coming. Now they are just computing what the marginal relief. You have to compute in question number 6, and the question number 7 is going to be what the marginal relief. Earlier till now, we have computed the marginal relief questions in the case of individuals like Mr. Veer. Okay, we have computed the marginal relief in the case of individuals. Now they are asking for the marginal relief in the case of domestic companies. Okay, for the domestic companies. Now in the one question they are saying On 1 crore, the income is 1 crore 1 lakh rupees. On one question, it is saying the income is 10 crore 1 lakh rupees. Okay, they are saying the previous year turnover is what? 402 lakh rupees. Here it is 410 crore rupees. So in both the cases, it is exceeding 400 crore rupees in the previous year 23-24. Then the tax rate is going to be what? 30%. Okay, and if the income is exceeding 1 crore rupees but up to 10 crore rupees, then the surcharge rate on the domestic company is going to be what? 7%, but here it is going to be 12% if the income exceeding 10 crore rupees. Understood or not? Can you follow the same steps and calculate the marginal relief? Can we do that? Yes. Under step number 1, what is the answer? What is the thing that you have to compute the tax on 1 crore 1 lakh rupees? So what should be the answer? That 1 crore 1 lakh rupees multiplied by 30%. Okay, the tax rate is going to be 30% because the turnover is exceeding 400 crore rupees. Correct? Yes. Plus, I have to do what? I have to apply the 7% of surcharge. Yes, my total tax is going to be 32 lakh 42,100. Now, second, tax on 1 crore. Can you calculate the tax on 1 crore? That is 1 crore multiplied by 30%. But here as well, the surcharge rate is applicable at the rate of. Tell me whether the surcharge rate is applicable here. No, the surcharge rate is not going to be applicable because in the case of the company, the surcharge rate is applicable over and above 1 crore rupees. Array, yes or not? Yes. So on this, the total answer is going to be what? Plus 4% sorry, not 4% HEC. It is going to be 1 crore multiplied by 30%. It is going to be 30 lakh rupees. Correct or not? It is going to be 30 lakh rupees. What is the third step? We were saying step number 2 plus 1 lakh plus increase in income. What is the increase in income? From 1 crore to 1 crore 1 lakh rupees. 1 lakh rupees of income is increasing. So 30 lakh rupees plus 1 lakh of income. Then it is going to be what? 31 lakh rupees. Correct? This is the third step. Now what they are asking for? They are asking for our marginal relief, that is under number 4. Step number 4, what it says? Step number 1 minus step number 3, that is 32 42 100 minus 31 lakh rupees. That is going to be my 1,42,100. See whether I got the answer or not. 1,42,100. Understood or not? As simple as that. They have further given you the tax payable as well. What is going to be the tax payable? But have they asked for the computation of tax payable? No, they haven't asked for the computation of tax payable. They just asked for the marginal relief. So just compute the marginal relief. For computation of tax payable, if you have the time, you can calculate it, but there is no marks for that because they have just asked for the computation of marginal relief. So just do that. Okay. In the same way, you have to do for the 10 lakh rupees and you will get the answer. It is as simple as that. So the question number 6 is over. Question number 7 is over. For the question number 7 as well, the same thing is to be followed for 10 crore rupees of income. Understood? For, or let me discuss, for 10 crore 1 lakh rupees of income, the tax payable is going to be 3 crore 36 lakh 33,600. But for the 10 crore rupees, the tax is going to be 3 crore 21 lakh rupees. So the first step is going to be 336 33,600. Second step is going to be 3 crore 21 lakh rupees. Third step is going to be what? What is the third step? This plus increase in income. So 3 crore 21 lakh rupees plus 1 lakh rupees is going to be 3 crore 22 lakh rupees. Correct? The fourth step is to what? To step 1 minus step 3. So 336,336,000 minus 322,000,000. Can you tell me the answer? 336,336,000 minus 322. It is going to be marginal relief of 14,33,600. Whether I got the answer? Yes. The marginal relief is going to be 14,33,600. Correct? As easy as that. Tell me that. It is going to be easy. Done. Moving forward to question number 8. Now see, it is Mr. Mahesh of 32 years who is a resident in India and his total income is going to be 10 lakh 50,000 rupees and you have to compute his tax liability under the default tax regime. if he is under the default tax regime and his total income is not exceeding 12 lakh rupees, and also he is a resident of India. If he is a non-resident, then we are not going to give any kind of relaxation to them. But if he is a resident of India and income is up to 12 lakh rupees, if up to 12 lakh rupees, then in that particular case, what is going to be that you are going to get the rebate. So first you have to calculate the tax on that particular income. So the tax on 10 lakh 50,000 rupees is going to be 45,000 rupees as per the default tax regime. You have to compute and give the final tax rebate on of under section number 87A. So it is going to be your nil. Okay, same question number 9. It says that it is also a resident of India and total income is exceeding 12 lakh 15,000 rupees. Now the income is exceeding 12 lakh 50,000 rupees and he is under the default tax regime. But listen to me very carefully. I have taught you one concept that under a default tax regime, if there is a slight increase in the income over and above the rebate income, that is, the rebate income is like 12 lakh rupees. If your income is of up to 12 lakh rupees, you will get the rebate. But there is a slight increase in the income that is of 15,000 rupees. Then only and only in the default tax regime, not in the old tax regime, there is a concept of marginal relief in the rebate as well. Taught you that in the classes. What was the formula? What was the formula of marginal relief in case of the rebate? That is the tax payable minus tax payable minus income minus 12 lakh. This is going to be the formula of marginal relief. Yes. Now see, what is the formula? First we have to calculate what? Tax payable. First what we have to calculate? The tax payable. So calculate the tax payable on 12 lakh 15,000 rupees. Calculate the tax payable on 12 lakh 15,000 rupees as per the default tax regime. They have calculated like 62,250. Now you have to calculate, it will come to 62,250. Okay, yes. Minus my income is what? 12 lakh 15,000 minus 12 lakh. So my marginal relief is going to be what? 62,250 minus 15,000. It is going to be my 47,250 is going to be my marginal relief of the total tax. I have to pay the total tax of 62,250, but I am getting the relief of 47,250. That means I have to pay only 15,000 rupees plus 4% surcharge. Then it is going to be what? 15,600 rupees is going to be my final tax liability, which is here. So do you understand? I have already taught you this particular formula. Yes, you can't say no because I have done this. Tax payable minus total income minus 12 lakh. I have already discussed this with you. This was the formula. I have also write it here. Clearly done, easy. So you have to pay the tax of that particular income which is increased. Okay, that is 15 lakh rupees. Sorry, that is 15,000 rupees plus surcharge plus HC. Understood? Easy? Yes. Coming to question number 10. What does it say? Is that Mr. Manish, who is of age 47, he is a resident in India. His income is 4 lakh 15,000 rupees. And if he opted to shift out of the default tax regime, if he is going to shift out of the default tax regime, so he is under the old tax regime. Yes, he is under the old tax regime, and under the old tax regime there is a rebate up to 5 lakh rupees of income, and his income is only 4 lakh 15,000 rupees. So first calculate the tax on the 4 lakh 15,000 rupees as per the 2 lakh 50,000 of the basic exemption limit, and give the rebate of the full amount, that is going to be 8250, and the tax liability is going to be the nil because he is going to get the full amount of the refund rebate. Understood? Easy way. Yes. Now moving forward to the TY case. We have covered each and every each and every illustration of ICI chapter. Okay, ICI chapter. Now we are going to move on to the SMTY case, that is a test your knowledge questions. Okay, now Mr. Bhargav, a leading advocate on a corporate law, decided to reduce his practice and to accept brief only for paying his taxes and making charities with the fees received on such brief. Okay, what they had done, Mr. Bhargav was a advocate, and okay, and he wants to reduce his practice and only accept the work of briefing the taxes. Okay, and by getting the fees of those briefings he want to do the charity work. Okay, now in a particular case, he agreed to appear to defend in the Supreme Court on a condition that he would be provided 5 lakh rupees for public charitable trust that he could create. Okay, what he is doing now, he is accepting the professional work, okay, to defend a company. But what he is asking for, he is asking for 5 lakh rupees as a fees so that he could make a public charitable trust. Okay, now he defended the company and was paid the sum by the company. Okay, the he created a trust of that sum by by executing a trust deed. Now the trust deed is executed. Okay, decide whether the amount received of by Mr. Bhargav is accessible in the hands as income from profession. Yes, definitely. He has done in the capacity of advocate or lawyer. He has done his business. But the objective of that particular income, that is 5 lakh rupees, was to open a particular public charitable trust. So the intention does not matter. That your intention is to open a public charitable trust, that does not mean that it is not your income or profession. You have earned that 5 lakh rupees by doing your business, that by doing your profession. It is not like a diversion of income. It will We will treat it diversion of income in the second case. But what we are doing here, the income in our hand is going to be what? The income from profession. Once I have created a charitable trust, then whatever I am receiving in that particular charitable trust is going to be the income of that trust, not my trust. But as of now, I have received that 5 lakh rupees now, so it is my income from profession only. It is not the income of that particular trust. This is what it is written in that particular case. Then it is going to be taxable under the head of PGBP. Understood? It is not a case of a diversion of income that I have already discussed to you. Okay, nothing new in that. Now, question number 12. XYZ Limited took over a running business of a sole proprietor by a sale deed. Okay. As per the sale deed, XYZ Limited undertook to pay overriding charge of 50,000 per annum to the wife of the sole proprietor in addition to the sale consideration. Whatever the sale consideration it is, okay, whatever the profit they are, whatever the sale consideration it is, they also undertook to pay 15,000 per annum to the wife. Okay. The sale deed also specifically mentioned that the amount was so charged on the net profit of XYZ Limited. Okay, whenever you see that the amount was charged on the net profit of XYZ Limited, then there should be a case law that you must remember, that is the GIT and PAL X-rays. Okay, we have already studied that particular case law. Yes, we have already studied this particular case law, GIT versus GIT and PAL X-rays, where I have said thus an overriding a charge on a profit amount to diversion or application of income. What is going to be? It is going to be the diversion of income as per the High Court rulings. Okay, Allahabad High Court ruling. ALL is a Allahabad High Court ruling. Okay, it never belonged to the assessee. It was never belonged to the assessee. The company is earning that particular profit. In that particular case, what they are saying, that the company is earning the profit. Okay, but the company is earning on behalf of the wife, because the sale deed was actually saying that whatever the earning you are income coming, whatever the earning that you are making now, you have to pay 15,000 per annum to the wife. Okay, so whatever the earning, whatever the charge on the profit that was created on the sale deed, means the income, that is the profit that is earned by the firm. It is not of the firm. The firm is earning for the wife. The firm is earning for the wife. So it is going to be the, as per the GIT and PAL X-rays, it is going to be what? The diversion of income. And in the board notes as well, if you come, in the board notes as well, is if you come, we have studied the concept of diversion of income. We have already discussed the diversion of income, where I've said that if there is an agreement, okay, so whatever it is going to be in the wife account is going to be the taxable in the hands of wife, not in the hands of the company. It is a case of what? Diversion of income. We have discussed this or not? Tell me this. We have already discussed this particular thing. Yes, so this is what it is written. This is what it is written. See, the same case law that I have discussed, and it is going to be diversion of income by not merely the application of income, because it is earned for the purpose of that particular assessee. Are you understood or not? Done clearly? This question is done. we have discussed. Now coming to question number 13. MKG Agency is a partnership firm consisting Mr. Mohan and the three major sons. Okay. The partnership deed provided that after the death of Mr. Mohan, the business shall be continued by the sons subject to the condition that the firm shall pay 20% of the profit to their mother Lakshmi. Okay, so what it is in the partnership deed, it is written that if Mr. Mohan dies, then the son of Mr. Mohan, the three sons, will definitely carry on the partnership firm, but whatever they are earning, they have to pay 20% of their profits to their mother. Okay, it was written in the partnership deed, so it is a agreement, and if it is a agreement, then what it is, then it is the income of, then it is the case of diversion. And if this is a case of diversion, so whatever the earning, whatever the profit is given to the mother, whatever the profits is given to the mother is going to be taxed in their hands, not in the hands of the firm, that we have already discussed in the case of, in the board notes na. See, in the board notes we have discussed now, whatever the profit is given to the wife account is going to be taxed in the hands of director's wife, in our case the partner's wife. Okay, so the same thing is asking here as well. Now what they are asking, see now, Mr. Mohan died in March 2025, that is in the previous year 25-26. The reconstituted firm paid 1 lakh rupees, which is equal to the 20% of the profit to Lakshmi, and claimed this amount as deduction from its income. No, it is not your income, it is the income of Mrs. Lakshmi. Okay, and it was earned for that particular person itself. The firm is earning, but earning on behalf of Mrs. Lakshmi itself. Okay, examine the correctness of the claim of the firm. So the correctness is also so in that particular case, okay, it is going to be taxed in the hands of Mrs. Lakshmi itself. Okay, so the issue raised, the problem is based on the concept of diversion of income by overriding title, which is well recognized in the income tax law. Yes, in the instant case, the amount of 1 lakh rupees being the 20% of the profit of the firm paid to the Lakshmi get diverted at the source by creating a charge in her favor as per the agreement, okay, which is a partnership deed. Such income does not reach to the assessee firm because the assessee firm has not earned that income. If he is earning, so he is earning on behalf of Mrs. Lakshmi. Rather, such income is then diverted to other person, and such other person, who is the other person here? Mrs. Lakshmi has a better title on such income than the assessee. Assessee is what? The firm, okay, and the other person is what? The Lakshmi. The firm might have received the said amount, but it is so received for and on behalf of Lakshmi. The firm might have received it, but it is received on behalf of Mrs. Lakshmi because it is already enacted in the partnership deed. Who possesses the overriding title? Therefore, the amount paid to Mr. Lakshmi should be excluded from the income of the firm. Should be excluded from the income of the firm because it is not going to be taxed in the firm's hand. It is going to be taxed in the Mrs. Lakshmi's hand. Okay, and the same case law, CIT versus Nariman V. Barucha, we have already seen that. Okay, shall I move forward now? Question number 14. Anand was a Karta of HUF. He died behind his major son Prem, okay, his widow, his grandmother, and his brother's wife. Means there is a major son, only one son is left, that is Prem. See, other are what? Female, widow, mother, grandmother, or the brother's wife. All are who? All are the female co-partners, but only one is the male co-partner. So they are asking you, can the HUF retain its status for the surviving partner who become the would become the co-owners? So whether by only having a one male co-partner, can the HUF retain its status? I have already discussed the same thing with you, that only if there is only one male co-partner as well, the HUF retain its status, and it continue working. It is already done. It is already taught you in the point number 7, the case law 7, that is Goli Bundana, okay, versus CIT. Can a HUF continue with only one male member? Yes, it does not cease to exist if in only one male co-partner left. If only one male co-partner left also, then also it is the HUF does not cease to exist. It is also said by the Supreme Court. The same question they are asking you, and the same question you already know, the same case law. Okay, the HUF will retain its status. I have discussed each and everything. Okay. Now, question number 15. Mr. C borrowed on Hundi, section number 69D. By seeing the word Hundi, you can remember the section number 69D, where he borrowed some amount of 25,000 rupees by a bearer check. Oh, this is wrong. They have to borrow by a account pay check and repeat the same with the account pay check. Oh, with interest. If he borrowed 25,000 rupees and repaying 30,000 rupees, means the interest is already included in the repayment. So the repayment is okay because it is done in the account pay check. But whether they can borrow in the bearer check, that was wrong. So this particular 25,000 rupees under section number 69D is going to be my deemed income. It's going to be my deemed income, and I have to pay taxes on that particular section 25,000, and it is going to be under section number 115 BBE, that is of 60%. Do you remember that particular section as well? Yes. So this is what it is written. See, in this case, Mr. C has borrowed 25,000 rupees on Hundi by a bearer check. Therefore, it shall be deemed to be the income of Mr. C for the previous year. Since the repayment is along with the interest was made in the account paycheck, the same would not hit the provisions of 69D. If the repayment I have done in the account paycheck now, there is no issue. But the borrowing has done in the bearer check, that was the main issue. So that is valid in law. So the AO wants to treat the amount borrowed, not repaid. The amount borrowed is income during the previous year. Whether he can do so, yes, he is good. He is good. Okay, the assessing officer treating the amount borrowed during the previous year is valid in law. Suppose if he say that I want to treat the amount repaid as income during the previous year, whether he was correct? No, in that particular case he was not correct. Now coming to question number 16. Okay, the assessing officer found during the course of the assessment of the firm that it paid the rent of the business premises amounting to rupees 60,000, which was not debited in the books of account for the year ended 31st March 2026. Okay, it was not debited in their accounts, but the firm did not explain the source of the rent. If you have done the unexplained expenditure, so as per section number 69C, either you have to explain the sources, okay, or the explanation should also be satisfied by the AO. The AO should also be satisfied by the explanation, but in that particular case, the firm did not provide the explanation. And the AO made the addition of 60,000 in the assessment year 26-27. The firm is not saying that remove this deemed income of 60,000 rupees, but what they are saying, that they are saying that okay, you have done the addition, we are good to go. Now can you please allow me the deduction of that particular 60,000 rupees, because it was done for the purpose of my business, because it was done for the purpose of my business. So can you remember section number 69C? So can you remember section number 69C, this question note, that such unexplained expenditure shall not be allowed as deduction under any head. It will not be allowed as per the deduction under any head. So this particular thing as well, you will not be allowed. The firm claim is not tenable. It shall not be allowed any deduction from the any head. The section number 69C. Do you remember that particular section? See, section number 69C. We have already studied now. Everything is over. Easy. Now coming to the last part, that is the past paper RTP MTP. From now onwards, see, the question on the past papers on the basic concept is very rare. They cannot even ask you the question, because it's going to be the cakewalk for you. Okay, so they are not going to ask you. It is already from like various years ago they just asked the question, so we have just reframed it, that the total income of Mr. X is going to be 16 lakh rupees. His income from the house property FD. Now you have to compute the tax liability under the default tax regime. So just compute the default as per the default tax regime. It is going to be the 1,20,000 rupees plus HEC. The final answer is going to be yours. Okay, 124,800. This now ends your whole basic concept chapter. Now we shall be moving towards the PGPP in the next class. So all the very best. Keep writing, keep practicing, and keep solving, so that your exams went very well, so that you can clear with a title CA with exemption in DT. Okay, all the very best.